If you are wondering why gold price seems to be skyrocketing, you are in a good place now. The good news, you are absolutely right. Gold has been soaring in 2025. Here's a breakdown of what fueling the surge. Key drivers behind the gold. Central bank and institutional buying. Many banks, central banks, particularly in emerging markets like China, India, and Turkey, are aggressively buying gold to diversify reserves and hedge against political risks and sanctions. The institutional demand is a major tailwind for gold price. Central banks have actually buying gold, underpinning price strength. Goldman Sachs forecast expects price to rise to 3,700 by the end of 2025. So it is almost $4,000 for each coin and up to 3,880 in a recession scenario. Long-term conviction buyers are reinforcing this trend. Safe haven demand and geopolitical uncertainty aimed geopolitical tensions such as conflicts and diplomatic risk. Investors flock to gold, a safe haven asset. Business Insider cites geopolitical tensions, trade disputes, and economic instability as key drivers behind record highs. Encofacts notes that private investors and ETFs are piling in, using gold to hedge inflation and instability. Lower US Treasury yields and Fed rate cuts expectations. Gold is non-yielding, so it thrives where interest rates are. Bonds yield fall. Lower opportunity cost make it more attractive. Today is a part driven by falling US Treasury yields and anticipation of Federal Reserve rate cuts, boosting gold's appeal. A weakening US dollar, which makes gold cheaper for foreign buyers, is another significant supporting factor. Tariffs, uncertainty, market psychology, unexpected policies moves have spooked markets, and this is a buying pressure. In early August, US Customs ruled that certain gold bars would face up to 39% tariff, prompting a brief spike in price. Can you imagine that? I don't know if that happened, but you see, they can actually raise the taxes on gold, and that will be more difficult to buy gold, cheap gold, prompting a brief spike in price. The ruling was later reversed by this volatility surged. Investors sentiment, especially FOMO, fear of missing out, and bullish momentum after record highs has further boosted demand. What factors are increasing gold? First of all, central bank buying, long-term institutional demand. Second, geopolitical economic risk, safe haven demand strengthens. Lower TL trade cut hopes. Gold looks more attractive than bonds. Weak US dollar, lower cost of global buyers, policy uncertainty, sentiment, volatility, and bullish momentum add fuel. Current market performance, this is very important, that gold has surged around 27-32% year to date, outperforming most assets. Briefly reached a record high of $3,534 per 1 ounce as of today. Spot gold is going around $3,350 per 1 ounce. And now I am going to try to discuss this expert price forecast. Goldman Sachs says the gold will be 3,700 by year 2005. So by year end of 2005, up to 3,880 in recession. Goldman Sachs says that it can be even more. And there is a guy called Jeffrey Gundlach, something like this, and he predicts the gold could reach 4,000 for each coin. If something will happen. Gold is climbing rapidly due to combination of those mentioned strategic reserves, accumulation, risk-driven investors demand, and macro signals like rate cuts and currency weakens, while the environment remains volatile. Analysts generally expect the gold to rise even to $4,000, but this forecast is in dollars. There are other currencies such as British pound, such as euro, such as Swiss franc, and much more other currencies like Chinese renminbi, Chinese yuan, Japanese yen, even currency like Turkish lira. Actually, Turkish lira is losing so strongly, and actually this is disaster in Turkey. What is happening there to gold actually is surging. It is growing and growing and growing all the time, and this is a question: what gold price will be in next 10 years? If we try to forecast the gold price based on data from last 10 years, because the gold actually been growing for last 10 years, 20 years, 30 years, 40 years and 50 years. But if we use just data for last 10 years, then in next 10 years, in 2035, the average gold price must be counted as it's been actually growing for last 10 years. So what ratio are we going to use? We have to use around 11.3% per year from today's price, and that means if we project next 10 years based on this data, if we just take this 3,350 or 3,500, and if we use the compound interest rate, as gold actually is rising as a compound interest rate, because you don't bite your gold when that increase and you don't sell the bit, but some people do but not everybody, not many people do that because then it's cheaper. So if we take that price and if we add 11.3% to this price that we have now, the gold probably will reach the projection, actually based on real mathematics, just real mathematics, will be $9,800 if the last 10 years pace continues. This is the reality. Gold is not a steady growth, of course, asset like stocks. It's driven by inflation, interest rates, central bank policies and crises, but also by technological demand, because the technological demand is higher and higher. The gold can be impacted, but also silver and platinum and pallets and all other metals. Ladies and gentlemen, thank you for this video, that you've been with me for whole of this video. Please subscribe this channel if you like my video. Please hit the thumb up. Thank you very much. I hope to see you soon. I wish you the best investment and biggest profit ever. Bye bye.